Hey guys, it's Max. Hey, I wanted to come on and real quick talk about the GPTY verse this morning. I showed the GPTY verse and I said GPTY wasn't down and it was probably due to the aggressive hedge they had. Well, anyway, of course, then the market opened up. That was probably a stale quote. And yes, GPTY is down, although not as much as they otherwise would be. And I think we can see that in option strat. And I'm going to show you how I figured it. Um, okay, so like I say, sorry about the bad information. Right here, I had it said up 0.28 this morning, but it was a stale quote. Anyway, right now it's down 5.2. Actually, and this is a stale quote too. For some reason, Google won't give me the darn quote, but that's fine. We can outsmart the computer. We just gotta check it out. So I just checked; it was down 5.28 a second ago, but the market's dropping. But yeah, it's down 5.30 now, right here. So I'll put that in there, or that's probably close enough. I probably shouldn't have even backed with it, but okay, I got that in there. Okay, so now what that gets me is the Altiverse, which shows that the average stock in their universe is down 6.3. So that's what they should be down. They're only down 5. That's about a 15% difference between 5 and 6, right? Yeah. Okay. So here's the thing, though. Does that make sense with what I see? Because I've been following the trades on the individual level, and yes, it does. Because let me show you here. No, not that. All right, let me show you this. These are puts they own. This is the triple Qs, which is a NASDAQ index, and they've bought puts on it. They bought a put spread, which is it's a bearish hedge. Well, anyway, we can look as time goes by. This shows what the trade's worth. We're on the dotted line right now. The trade's worth $70,000 right now. Well, okay. So $70,000. So the fund itself is worth $7.5 million, or it was worth $7.5 million last night, right? So follow along with me here. It's worth $7.5 million last night, but the average stock is down 6% today. 6%. That's like about 490,000 or something. It should be down. Okay. However, due to this position being up 60 or 70,000, instead of being down 450 to 490 like they should be, they're down about 400, about 10 or 15% less. They're down like 415 to 420. And that would make sense. Now, here's the thing about this spread. If for some reason the selling should pick up and the market should keep dropping, and then let's say by Wednesday, the market's down another 5 from here. Well, then this option position would be worth 220,000. Okay. But 5% on a $7.5 million portfolio is 375,000. They have it looks to me like they have 50, they have about half of it hedged. If it drops further than that, you can do the math on 10%. It's about half hedged. On 10%, they'd lose 750,000 on their long positions, but they'd gain 400,000 here, 440. At 15%, it works out too. Now, once their protection disappears, after that. So this isn't free money, and it's trying to protect about half the downside, but it's a definite improvement. There's no other fund doing this other than Alti, which is doing it at the individual stock by stock level using callers. I just think this is easier to look at. I'm just an index guy. So as soon as I saw this index spread on here, this isn't perfect. Lots of times what happens when you do this kind of strategy, the stocks you pick go down, but the index doesn't. So this hedge doesn't work for whatever reason. This hedge protects when the whole market goes down, but it doesn't protect you from picking bad stocks. The way Alti does it protects you more from picking bad stocks because you have them hedged at a stock by stock basis. But Alti can get kind of beat up pretty bad in an overall market pullback somewhat. So there's no perfect way, no one right way to do it. Of course, if there was, everyone would do it that way. And, um, but anyway, so we'll see what happens with the sell off, but hopefully it won't pick up from here. My prediction is if it does pick up from here, GPTY should only catch half the downside. Today it looks like they caught about 85% of the downside, but that's why I came on to show you guys. It was because this really hasn't kicked in yet. As this kicks in more, and hopefully it doesn't, hopefully it doesn't. If the market goes back the other way, that's fine. It's like this never happened. But here's the other side of this. See right there, this trade cost $76,000, which is 1% of the $7.5 million. So if nothing happens, this trade's going to bleed off 1% of the net asset value. So that could be a problem too, or it's something you have to factor in. It's an expense. But if you have a market that pulls back 10%, your fund should only be down 5%. So that's when the expense pays off. If you have a market that's up 5%, your fund ought to be up 5%. It's only up 4%. And that's when, that's when you wish you hadn't done it. Like I say, there's no right or wrong answer, but I just wanted to come on today and talk a little bit about that hedge. All right. So let's look at some other stuff. The Q's kind of had something for everybody this morning. Some people were waiting for a dip to buy. And so, if you get one, if it comes into one of these bullish gaps and then buyers are there to buy it, sometimes that can be a good place for a dip buy. But sometimes a bearish gap can be a good place to sell a rally. Well, anyway, both people got a chance today because you could have bought just because the market's volatile. Buyers got a chance to buy the 511 level. Sellers got a chance to sell 515, 516, 517, somewhere in that level. There's a lot of people that wanted to sell between last week and this week that couldn't. Actually between last night and, that's last week and this week. Between last week and this week that couldn't. This is a gigantic gap, which indicates a gigantic imbalance of sellers right there. But there, like I say, that we have bullish gaps. We have apparently an imbalance of buyers down here. So just like last week when we were down here, I said we were stuck between two gaps. Pretty much so. We got out of this one a little bit, and then we failed. But anyway, it's an interesting market. So the bad news is the Qs and the SPY, but the good news is the Russell. It's barely down. It's still within it's still almost within last week's range or the week before. Anyway, it's close. But it definitely looks better than the other ones. Something else that's encouraging is the 10-year yields. These are bond futures, but this is expressed in forms of yields. And just not too long, yields were 4.6, and not too long before that, they were 4.7, 4.8. Just not too long ago, not too many days ago at all. So they are definitely trending the right direction, up a little bit this morning. But so we'll keep an eye on that as well. Volatility's up. We look at volatility sometimes to help give us a warning. This time it gave no, there was no warning. This was just out of the blue. This was a Trump tweet. No way to predict this. It's looking like right now they're taking off their hedges. The volatility is on the low of the day, but the market is not yet on the high of the day. Well, the market's getting close to the high of the day. Okay, well, yeah. All right. It looks like the dip was bought. We only have an hour and a half left to go. For now, it looks like the dip was bought. So hopefully for the bulls, this was a one-day event. But once again, if you're a bear, what you could do is you could do this. You still have this gigantic imbalance of people that wanted to get out up here. I'm just cleaning the chart up. Those gaps are dead. All right. So what a bear could do is a bear could go ahead and let us rally, maybe let us open tomorrow at around 603 or whatever. And then especially if we faltered, I mean, you'd have to use your own indicators, your own judgment. But a bear could use this area to make bearish adjustments, to put on a bearish trade, could fade a rally. This is where you'd want to fade a rally. But if you could get it back around here, 595, or if it sells off further, if you could get it down in this area, it might be an area to look to try to buy the dip like the people did this morning. There was people that couldn't get filled that day at that gap that probably just left their orders in. Some of them did. I guarantee you. And other people were just interested in that area and buying the dip. But, sure enough, they say all gaps are filled eventually. But in a bullish market, when you get a retracement right to a gap like that, if you're a bull, that would have been a place to take a bullish stand. If you're a bear, like I said, you wouldn't have done anything. You would have waited for a rally and then try to pick a place to, because no one has a gun to your head. You don't have to trade every day. You can just look for the best setups. But anyway, sometimes you can tell by looking at VIX and VIVIX when they're taking the hedges off. VIVIX is not on the low of the day. So VIVIX is not as bullish as VIX is. We can also look at VIX futures. They trade 24 hours, and they are also not on the low of the day. They were lower actually at 9:30 this morning. So who knows? Who knows? I'll be anxious to know what you guys think, but they're coming down. Look at that big bar. They just, I don't know. I kind of think this was probably an overreaction this morning, but it's easy to say now when we're up and it's, and here we are at the end of the day and we're almost on the high. So of course that's easy to say. I had no idea this morning there's an overreaction, but right now it's kind of looking like that. So, all right, guys. Well, I appreciate y'all for being here. I just wanted to cover that GPTY hedge, and I want to really keep a close eye on this. Want to make sure it's doing well. Look, it's bouncing as well too. GPTY is down 5.19. LFGY is 50% more volatile. But even if 50% more volatile, it's 11. So you take off 50%, it should be down like 7 or 8 is what GPTY should be down. And so the difference, it may not seem like much, but it's due to that put spread hedge. All right, guys, I appreciate y'all for being here. You have a wonderful day.